I don't expect a flash crash, but if you don't expect one, and you're not prepared for it, that's, in my opinion, a mistake. So absolutely, could Bitcoin flash crash? Could the crypto market see a flash crash? Absolutely. Now, I'm of the opinion that if we do see a flash crash, it would probably be mild and we'd probably find support buyers down here very quickly to see a fast recovery. But I'm going to go over how you can prepare for multiple scenarios. Like I said, I think the most likely scenario is that we're oversold right now, especially when we compare to other assets, other value assets in the market. I think the most likely scenario is actually short-term bullish. However, I think it's very, very smart to be prepared for a flash crash. So how do you actually buy a flash crash? Now, this may seem obvious, but we're going to get a little bit nuanced here. So for one, have stable coins ready. Now, a lot of people are in a, and it's going to depend on your situation, of course, right? And this is not financial advice, but a lot of people wonder how many or what percentage of stable coins do they need ready? And this is also going to differ depending on what your strategy is, right? For Ian uses Ethereum as a store of value, right? So he's going to be constantly heavily invested in crypto and probably not going to have a big stablecoin balance because he's a value investor. But if you're not strictly a value investor, having some stablecoins ready to buy these flash crashes can be very smart. I support that you probably only need 5 to 10%. Why? Why do you only need 5 or 10%? Well, let's just go with a 10% number here. And for easy math, let's say we see a 50% drop in crypto and your portfolio drops by 50%. Sound familiar? It's what just happened to Bitcoin. So if you think it can't happen, it absolutely can happen. It just did happen, right? So if your crypto portfolio drops by 50% and 10% was in stablecoins, well, now stablecoins make up 20% of your portfolio. Some simple math there. Then if you introduce even very, very low risk levels of leverage, and I don't recommend leverage for everybody, not financial advice, but if you're comfortable with 2x and 3x leverage, you can use 2x leverage on 20% of your portfolio being stablecoins, and all of a sudden you've leveraged that 20% of your portfolio that is in stablecoins up to 40% if you use 2x leverage, or 60% if you use 3x leverage. That's assuming you buy with the dip with all of your stablecoins, which again, not necessarily recommended. Second thing, find support. That may seem obvious, but again, we're going to get nuanced here. So the first thing I've done is just constructed a support zone, right? Where do we think the buyers are going to come in a nasty, nasty flash crash, right? This is a very conservative support zone in the sense that this takes into account that Bitcoin could fall all the way down to 20K, right? That's our previous all-time high. We've had some consolidation. Previous resistance is usually future support, right? And then I've just drawn bands on either side, minus 10% and plus 10%. So we've got a range between 18,000 and 22,000. Now, if we wanted to get even more nuanced, these should be about 11.11%, but I'm using 10% so you can follow along with easy math. Now, that 11.11% is related to 10x margin buying and margin selling levels, but if you use 10 or plus or minus 10%, you'll probably be fine, but just know that you may want to use plus 11 or minus 11 for your bands. Now, how deep do these corrections or these flash crashes that bounce back usually go? Usually they're 33% or 50% or somewhere in between. Why? Well, 33%, a 33% and a 33% correction from your base resistance or from your local high, right? So since we've already seen this crash from our all-time high, we've actually fallen minus 50%. And that's where we're consolidating. Yes, the total correction from the all-time high did go to like minus 55%, but for the bulk of our consolidation and support here, it's been centered around minus 50%. The reason that is because that is the level that you can no longer short Bitcoin and protect your on 2x leverage and protect your liquidation point against the all-time high, right? So if you're shorting Bitcoin on 2x leverage, right, which is really the lowest amount of leverage you can use, right, you're going to want to protect your liquidation point by keeping your liquidation point on your short above the all-time high. That means Bitcoin can come all the way up into a double top pattern, right, and you still won't get liquidated. However, as soon as Bitcoin drops below its 50% retracement line from its all-time high, which is about $32,500 because our all-time high was $65,000, then you can no longer short Bitcoin on leverage, right? So you can no longer amplify your capital with leverage. And that's why we see this pattern of support around 32,500. Now we have a new local high. It was around $41,200. We can take and assume that the people selling off their Bitcoin on leverage, right, shorting Bitcoin on leverage, are probably going to want to use this point to protect their liquidation points, right? So we can calculate roughly 33 and two scenarios: a 33% correction, which would bring us down to 27,560, and a negative 50% flash crash, which would bring us down to just over $20,000. Again, I'm reiterating, do I think this is likely? No, I don't think this is the most likely scenario at all, but not being prepared for it is a mistake, right? Quick little case study. You can see these corrections everywhere, right? You can study Bitcoin's chart, you can study Ethereum's chart, you can study just about any asset's chart, and you're going to see anything that trades on leverage, especially crypto, because crypto is a very leveraged market. And you can see these flash crashes, right, where we fall down below and we go 33% or 50% below. Now, the previous market cycle, Bitcoin topped out at 19,700. Where did it consolidate after its initial crash? Right? It started consolidating and finding support at this 50% retracement level, right? And then once it consolidated, right, it came back up. You get rid of that. It came back up and made two local highs up here at 13,000 and another local high at 12,000. Now, these in this situation would have been our local highs that we calculate our 50% retracements off of, our 50% where we're going to potentially put in our limit orders, right? If you used the purple line, the purple local high, you caught almost the bottom of this flash crash, right? If you used the more recent, and I'm a big fan of using whatever's most recent, the most recent local high, you caught the bottom wick of this flash crash at $6,000 just about perfectly, right? So that's just one little case study. There's plenty of case studies in Bitcoin's chart of these flash crashes. So I would contend that placing a limit, again, not financial advice, but where I'm going to be placing my limit orders, right, are right here at the negative 33% retracement level of our base resistance, or our most recent local high at 41,000, right? Same thing with 50,000. Now I think this, or same thing with the negative 50%. Now I think this level, 20,670, is solid because it's within our initial range of where we think support would come in a catastrophic event. It's within our support zone, but it's probably less likely to be filled than the negative 33% one, because we'd have to come all the way down to 20K. However, if we do see a catastrophic flash crash, right, I think we'd see a bounce back, but this is within our zone and it's above 20K. So it's not like we're trying to get really greedy, right, and try to find a buy down here below 20K. We would be likely to get filled if we did come all the way down to this range, right? Now, last thing, this liquidation protection line. As I mentioned before, if you're right, so we placed our limit buys at negative 33% and negative 50%, managing our risk. As I mentioned, if you're using 5 to 10% of your portfolio in stablecoins, how do you amplify that to 10, 15, 20, 25%, 30% of your portfolio? You can use mild leverage, 2x or 3x. I don't recommend using this in leverage unless you're very comfortable with it. Our liquidation protection line is taking the 50% retracement from our local low, right? So our worst case scenario is how bad could this really get if people really aggressively started shorting Bitcoin on 2x leverage, right? They would run out of being able to, they'd run out of the ability to protect their liquidation points as soon as Bitcoin got to about 14,300. Do I think Bitcoin's going this low? No, this is like our catch-all safety net, right? And this is our catch-all safety net because we're placing our liquidation points if we use leverage below this level, right? So if we place buy orders here at 33%, negative 33% from our local base resistance or our local high, and we place another order here at negative 50%, what leverage would we be comfortable with using that puts us below this level? And the answer is simple. I'm not going to go into the calculations behind this, but for this example, it would be 2x, right? Because a 50% retracement from 27,500 or so on 2x leverage, your liquidation point would be roughly 13,500, which is going to put you below 13,700, which is going to put you below this 14,000 line, right? Same thing goes for the 50%. We might be comfortable using maybe 3x, right? 3x leverage. If you want to do the math really quickly, so I did lie. I am going to do the math for you guys. Coordinates here exactly are 2670, right? If we want to find our liquidation point from a buy on 3x leverage from $20,670, you just divide by 1.5. Right, so that's going to put our liquidation point at 13,780, which is below our liquidation protection line. Now, last thing, one thing I like about this particular liquidation protection line is if we extend it out, it's very close to previous resistance back in June of 2019, right? So maybe you could even argue making a liquidation protection band and maybe just moving down your liquidation protection line down to this previous resistance at about 13,825. But it just so happens that our corrections, right, our flash crash projections, if we do see a flash crash at 2x and 3x leverage, perfectly put us below this level, right? So for those of you who may be wondering, I don't have these written down. The first one would be a 33% correction from our local high. That's $27,560. The second one, a 50% correction from our local highs, 20,670. Now, this is Bitcoin, and we're using Bitcoin as a proxy for the rest of the market. But now, Token Metrics, we're kind of all about altcoins, right? We're very bullish on altcoins, and a lot of our products and investment research are centered around altcoins, right? We're kind of Ethereum maximalists in some ways, and I'm big into Ethereum, very bullish on Ethereum. Now, if you want to see this type of thing done for other altcoins, including Ethereum, head over to tokenmetrics.com, to Token Metrics TV, and this is what we're doing in my show, Token Metrics Foresights, for the next couple weeks, where we're going to be preparing for these different scenarios. We're going to be preparing to take profits if we go up. We're going to be preparing for a flash crash. We're going to be preparing for range trading, right? So if you want to see more of this on different cryptocurrencies and different altcoins, head over to Token Metrics TV. And that wraps up how to buy a flash crash. Oh, one last thing. If we see fast recovery from the flash crash, right, like we did in 2017, and we come back to retest, consider taking profits in the short term. Consider taking profits in the short term, especially if you went all in with your stablecoin balance. The reason being is because we could always go further down. We could find resistance and go further down, and you could find yourself in a situation where you don't have stablecoins. Do you have to take profits on 100% of what you bought? Absolutely not. Maybe it's 5, 10, 15%. But consider taking some short-term profits if the trade goes in your favor. And that now wraps it up for how to buy a flash crash.
All right. Thank you, Forrest. So if you enjoyed that, please smash the like button, subscribe, share this video with your friend, tell a friend to tell a friend. Not being in crypto is a financial crime, crypto forever. And tell us what you think down below in the comments below. Okay.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.